Right, now we're going to talk about basically the opposite of an engulfing, but has, a pretty similar outcome. So these are inside bars. Inside bars are a candlestick pattern that happens very, very often in the market. So it's very important that you can read them correctly and use them correctly so that you don't get caught out using them. So that's something that I ignored for a very, very long time because I just couldn't get my head around them. But I soon learned that there are some pretty precise conditions. Basically, you can only use these in continuation. You would never use these as reversal. At least this is my advice, my personal experience, because they happen so often that trying to use them at every opportunity is not going to be beneficial. So there's quite a specific conditions that need to be met for them to actually be successful, at least in my findings in the market. So what I'm going to do is just talk through my examples of them and show you them in action. So what is an inside bar? An inside bar is basically how we spoke about engulfing, right? Where it is a candle that engulfs a previous candle. An inside bar is kind of the opposite. And what it's going to be is a candle that engulfs the next couple of candles. And when a candle pushes out the range, it's then ready to go. So let's look at this example. It might be confusing, but I will explain it as best I can. Look at this example here. This green candle is our master candle of this inside bar pattern. So we've got the low point there, we've got the high point there, the wicks boxed off, okay? That is the first of the inside bar. That is basically the inside bar. Now, what we get then is a candle whose body is completely enclosed within the boundaries of this candle, okay? We wick out, we can forget the wicks on these next candles. We just want to focus on the body. Now, if the body doesn't close above or below this candle, that then forms an inside bar. So this is the inside bar, and this is the candle contained within it. Now, the next candle, as we see, is a breakout, and this candle closes beneath the low of that first inside bar. This actually then sends us into a downside movement, and that is the inside bar pattern. So we have one candle that essentially goes against the trend. So, for example, we're in a downtrend here, a bullish candle with then another candle body contained within it, and any amount of candle bodies can be contained within it. But when the candle then breaks out, that provides us with the direction that we want to sell or buy in. So when I say we should only use these in line with the trend, I mean we should only use these bearish inside bars when we're in a downtrend, and we should only use bullish inside bars when we're in an uptrend. Okay, so I'll show you the examples, explain as best I can, and then we'll move on to some bullish ones. Right, so here we have got a bearish inside bar. This time being this red candle here. So focus on this red candle. We can see the high of that candle and the low of that candle then has 1, 2 candle bodies contained within it. So this forms the inside bar, that area there, okay? What we then get is a bearish candle that pushes beneath that consolidation, okay, beneath, and closes under the inside bar, closes outside of the boundaries of the inside bar. Now that is a selling signal. When we see that, we could sell with a stop loss above the inside bar and expect the trend to then continue down. As we can see, it did. Okay, we never actually surpassed that high again, even though we did push back and retest. So that is the first example, that being our inside bar, these two being the bars contained within it, and then the push beneath, that closure beneath being a selling opportunity, okay? The next one here, that's the inside bar, that green candle. The low of the candle and the high of the candle has this next candle contained within it. So then a closure beneath, because we're in this downtrend at the moment, will be a selling opportunity. And we saw the closure beneath, so we can actually then look to sell the market and bring it lower. So those are two examples of bearish inside bars. Now here's another one while we're here, because I don't want to, confuse too much. I mean, we've got a couple. Let's actually talk through a few just to get the best out of this. So here we are, still in a downtrend. This big red candle, the low of the candle, the high of the candle, has formed an inside bar. Within that inside bar, we have 1, 2, 3, 4, 5, 6, 7, 8 candles, 9 candles even, contained within that inside bar. But when we see one close beneath, we see that it then leads us into a big bearish downside movement. So that could have very well been a selling opportunity out of this inside bar, okay? So there we are. There's some bearish examples. Now I've got one more actually, which is contained within that one even. This one's quite interesting. But it's all about perspective, you just learn to read these. So this red candle here, 2 candles contained within the inside bar, one closes beneath, and then bam, down we go. Now this one would have been a better opportunity because had we, sold, then the break retest of that box, we could have used the high, and that still would have given us, around a 1 to 2 risk versus reward opportunity to sell lower. So there we go. There are some bearish inside bars. Now, just before we move into the bullish ones, just a quick recap over them. We have the one big master candle, the outside candle, with then numerous other candles contained within them. Now, when we mark out that master candle, the main inside bar candle, we mark it from wick to wick, the entire range of that specific trading session. So, for example, we're on the daily chart, so we connect the high of that day and the low of that day, and that is our inside bar. Now, any other price action that happens within there can wick out of the zone, okay? Until there's a closure above the high or low of the previous wick, the inside bar is valid. So even though here we are connecting wick to wick, we do not need to worry about the wicks on the next inside bars. We only need to worry about the candle body. Now, when we then see a candle body closure beneath the high, beneath the low or above the high of the previous day, that is our trigger for our trade, okay? Does that make sense? So for example, here we have the high of this day and the low of this day connected. We have 2 candle bodies trading within it. Yep, they wicked out, but no closures. But then when we see a closure beneath the low of that day, the inside bar candle day, that provides our selling opportunity. So it's wick to wick for the inside bar, and then just candle bodies is what we need to focus on for the actual interior candles. And it's a candle body closure that we need to use as our trigger for our trade. So let's move on to some bullish examples. We've got quite a few in this uptrending motion. Here's the first, this green candle being the inside bar candle. So we connect wick to wick, high to low of that specific day. And then we have 1, 2 additional days trading within the boundaries of that inside bar. As mentioned again, we wick beneath, but we do not close beneath. We do not close outside the range of that specific inside bar candle. So until we do, we are still contained. Now, if we can close above, as we're in an uptrend now, you can see we've switched from lower lows, lower highs to higher highs, higher lows. If we can actually go close above, that's going to be a buying signal. And as you can see, we gapped up and then bam, off the market went. So that's the first example. We have another example right out of that. As you can see, this inside bar candle, low of the day, high of the day, 2 candles contained within. And then when we see a bullish candle close above, as we're in an uptrend, buying opportunity. Okay. And we never actually come back down to beneath that inside bar again. We do come for a retest, but all that does is provide us with a secondary opportunity to buy if we never brought in here. So here's another one. This one's a bearish one, but in an uptrend. Okay. So we get a retracement forming this inside bar. We then have this red candle, that is. We then have another candle contained within it. And when we see a bullish closure over the zone, that provides us with a buying opportunity to re-enter the trend and catch a trade in line with it. So there we are. Another one here with this red candle body being our inside bar candle. Okay, that red one there. So wick to wick, all of these different candles contained within it. 1, 2, 3, 4, 5, 6, 7. An entire week of price action contained within this inside bar. And then when we see a closure above, that sets us into a new uptrending motion. So that is an example of the bullish inside bar, okay? Remember then, when we're in an uptrend, we only want to be trading inside bars that close above highs. When we're in a downtrend, we only want to be trading inside bars that close beneath lows. So we want to be very selective there because we are going to get a lot of messy inside bars that will be trading the opposite direction to the trend. And we only want to trade the very best, the very safest ones. So back to the bearish ones, just for another example or two. At the top here, where we see this trend top out, scaled in, we of course have got these higher lows, higher highs, higher low, quite visible there. If we look at that higher low point there, the market took that out, okay? So we've seen a closure beneath these previous higher lows, forming these new lower lows. So then when we form this lower high, which also happens to be this inside bar, okay, this red candle body, let's just get rid of that, with 1 day price action maintained within it. This next one that closes beneath is then a nice trigger to sell, okay? And as you can see, from there, never passed the high again. And the market came all the way down. So there's another example of a bearish inside bar candle. So I've got a couple more just to show you, and then we will close off this video. I think that I've hopefully explained this very nice. Hopefully you can actually understand what it is that we're seeing. So here we go. We are topped out, higher high, higher low, higher high, lower low, just taking out this one here. And then this big bearish engulfing begins to set us into a downtrend. So we have this big green candle, which is our bullish, our bearish inside bar, basically. I mean, of course, if we don't trade beneath it, then it's not bearish, but we've got 1, 2, 3 days of price action maintained within. Finally, on the 4th day, price action closes beneath that inside bar pattern and sets the market into a downtrending motion. So then once again, we get a huge inside bar forming, this big green candle. So we connect from the high to the low. And then we have 1, 2, 3, 4, 5, 6, 7, 8, 9 days of price action maintained within it. And when we manage to close beneath, the market tumbles down. So hopefully you've just seen some great examples of inside bars. Hopefully you understand how they work. We are looking for that one big main master candle, multiple candle bodies maintained within it. And then when we see a closure beneath the low in a downtrend or above the high in an uptrend, that is where we actually get our trigger point for our trades. So as mentioned, I don't use inside bars as much as I use engulfing, but that's because engulfing seems to me to form more. It's easier to identify and it shows instantly a clear shift in momentum. So to me, engulfing is just my favorite, but the inside bar for trend continuations can be a great way to get in, seeing the market between the lines and actually finding some good entry points. So hopefully you've enjoyed, and I'll see you in the next video when we're going to talk about a more rare candle pattern, but also a very exciting and very accurate when it does form candle pattern as well. So thanks for watching, and I'll see you there.